Money on my mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What's good, everybody? It's your boy Reckless Raven here, and we are back at it again with another episode of Future Financial. Not Future Financial Strategies. We're on a portfolio update for Robinhood. Jeez, it's early in the morning. Well, it's not early in the morning. It's mid-morning. Did not record last night. I was exhausted. Definitely needed some rest, and then slept in this morning. Got a busy day ahead, but I wanted to get this out because I missed last week, and missing 2 weeks in a row is just grounds for firing. Got a lot of stuff going on. Things are going well, making some, always making the adjustments as new information comes in. You know, goals change, things are moving forward. We're getting ready to start looking for that car, the holdover, mulling over the options for that. And yeah, just overall moving forward. So I'm going to go ahead and bring to the screen. We're going to jump right into it. I want to make sure everybody who's coming in to the video is hitting that like button, hitting that subscribe button, and sharing the content. Also, questions, concerns, drop in with me in the comments, because I do check and respond to them. Every time I upload, I go through my comments real quick, just kind of checking through there. When you guys are chatty, I'm chatty with you. When you're not, I don't have anyone to talk to. So hit me up down in the comments. I do appreciate the engagement. Also, get me out into the algorithm helps. Obviously, not financial advice. This is, one guy's trek through the financial landscape we find ourselves in. I am not sitting at the mountaintop. I am not one of these. I don't make any money off YouTube, so that's a first. I do not have a job that's making ultra high income. There's a lot of these guys who make these finance videos are also already rich. I'm just giving it from the everyday man perspective, your blue collar perspective, to show how we can, make some moves, maybe make some things happen, maybe get ourselves into some positions where we have a little bit more agency before our bodies break down, which is actually kind of one of my goals. So let's go ahead and jump into it. We're going to pull the Robinhood portfolio up. As you can see, we are definitely recording during daytime because this is showing during the daytime. I like to go over the positions now. This is a predominantly high yield holding portfolio, but I do have a moonshot and my Robinhood shares thrown in here. So we'll go through what the current holdings are. Robinhood has released where you can have separate portfolios. They did not have that previously. I am super excited about it. I've got to make some phone calls and start putting some pressure on Charles Schwab, because at this point I'm with almost all of my strategies, because I'm not an active trader. Most of my portfolio could actually live on Robinhood now, and I'd be fine with it. So we're gonna take some looks over there, because the margin just went down over on Robinhood as well. So we're living in the 0% margin, but now tapping some margin, might not be that bad. And yeah, so let's go ahead and jump on into this. Whoa, making noise, knocking stuff over on my desk. We've got Hood. We've got 6 shares. It's coming up to the end of the month, so that will be going up to 7 shares because I buy a share of the platform that I'm using every month. So we will be getting another share of Robinhood stock. Ulti, we are at 1,260 shares. Definitely made a staple point. We're getting over $100 a week now in distributions. And open, we are down to 63.05 shares. Now let's talk about the moves that we've made this month. most importantly, not on the list anymore, is how. It's still in our income strategy. It's down here. We still follow on the Robinhood train. We've got a couple of other positions that we have filtered in there, but I am really focused in on Ulti until I get to about 150 a share. Reason being is that income coming in is the most important thing for me. And now that we're over $100, moving towards that 150 target, I'll be able to, skim a little bit off that $100. But I wanted to have $100 to reinvest back into Ulti. And, the how position was producing a little bit of money, but it was like somewhere between 15 and 30 bucks. And while it helped, the focus for me in getting to those targets is more important. So for Ulti, we sold off the house shares. We actually were at a NAV positive when we sold, which is one of the great things about the weekly leverage funds is you have the opportunity to be NAV positive on them. Plus distribution. So we came out like a bandit with that. It was a worthwhile position for what it did and what it allowed us to do. We'll be bringing it back into the portfolio later. The Ulti position getting to 150 is going to give us some leverage. So now what I can do is whatever we make over $100, I'll probably put into the next position. And I am driving this a little bit hot. And by hot, I mean, I like my passive income percentage high, especially in the onset of my portfolios. It's more risk, more reward, yada, yada, yada. I am not risk averse. This is not all the investments that I have. And therefore, it's not something that I am really that concerned about. And actually, we're going to be making a shift in this portfolio. What we're going to be doing is anything over $100 from our Ulti position will be going to our Moonshot open door position. And yeah, but the important thing is, like, I've got some other players that are a little bit higher passive income that I've added to my wish list, my income strategy list. And those positions are going to start getting priority as far as the next position. And we'll get those up to $100 a week. And then we'll move on, and then we'll move on. And then we'll go back into getting our how position up to $100 per week. Open door, we sold some shares. Why? I wanted my money out of it. So every time I do, like, I have a really hard time not pulling my money that I put into it out at 100 shares, at 100% run up. With open, I'm obviously my targets for actually starting to like utilize this position or being like, hey, I won, sell the position off and get into another position is way higher than where we are now. Like, I'm looking into the $40 range if it does what they say they're going to do. And it seems that they're listening to shareholders and they're moving in the direction that they should be. But even with that said, we were up in the $10 range and I'm sitting at 150% profit. So I didn't sell half of it. I sold exactly what I needed to get my cost average out. So that's what I sold. We were $386 into it. I sold $386 worth of my open share position. So my initial money is back in my pocket. We rolled that over into Ulti to produce some more income. And now we get to start the whole process over again at the beginning of the month. For October, we will be putting another $100 into our open position and buying another $100 worth of shares wherever that ends us out. And then from that marker forward, we'll be tracking those buys. And then the next run up of 100%, we will, go ahead and continue to do the exact same thing, rinse and repeat. If we go up another 100%, then we'll start looking at it at certain target areas. And if we go up another 100%, we'll pull our initial investment out, what we've put into it, and let those remaining shares ride. So as it sits right now, I've got 63.05 shares of house shares of open, which means that like no matter what happens to those shares, I can't lose any money because my money is out of the position that I put into it. The money that I spent to buy those shares is out of those shares, which is awesome. I can't express enough how important it is to, protect your money. And that's kind of my way of doing that. Like, obviously not every position you have is going to go up 100%. It will over time, hopefully, but that's just not reality for a lot of positions. So that's kind of my demarcation, especially on my moonshot positions, because they're highly volatile. This was previously at 10, almost $11. And now we're back down to 852. And so, I'm like, cool, this is back in a buy range for next leg up, I guess. And since I was planning on dollar cost averaging around $1,000 into it anyway, this puts me back in a position where I'm pretty much going to be sitting pretty on that. And yeah, I'm excited about it. So we've got that going. So now we've got to jump over into the context. Let's see. Okay, so we got to go back here. And Google Chrome finally fixed the camera issue that they were having with StreamYard. So I'm back on Google Chrome. So I'm back home. Let's see. Stop that screen. We're going to add a different screen. And we do the context for there we go. Yeah. So we do the context. I don't know that I like this as much as I do the Opera window, though. So we might go back to recording over there because I do like the experience over there better. Yeah, that's interesting. So as we're jumping over here, we're going to go to the dashboard. We can look and see where we're at. So we're at $6,804.10 for the portfolio value. When we're looking at the total profit, we're at 17.2%. That's including distributions. Passive income is sitting above 80. And this was, so we're at 88.36%. Can't complain about that. Obviously, that's just running off Ulti at this juncture, which is our foundational position. We've got a couple of other positions that we will be looking at that are getting ready to get released. Granite Shares really has my attention. I like the way those funds are run. They fit kind of the way that I like to see stuff going on. So we've got some other positions in there that I'm going to be dabbling in other portfolios. And we will keep moving forward. So as far as what we're looking at over the next 12 months, that puts us at about $5,983.96. Those are things that I like to see. They're projecting us for the month of October. We're looking at about $578, which will be that's not going to be bad at all on the weekly. And this will climb because we are still buying. We're at 20% of our $30,000 annual goal in the lifestyle portfolio. Now, this is lifestyle. This is the fun stuff. This is trips, extra things. This is the extra. Now, we have another portfolio that's our primary income portfolio that we do on our monthly updates, which is when we look at the Charles Schwab accounts. That primary income portfolio is our existence. That's like food, utility, shelter, stuff like that. Vehicle. Actually, I'm going to probably be putting the vehicle over there, even though the holdover will probably be purchased out of this account. but yeah, so these are obviously arbitrary numbers. I don't think I spend $30,000 on doing fun stuff now. So that's going to give me a whole lot of money to reinvest, even with trips in and out of the country. Like, I'm not going to be gone all the time. And I don't want to be. I am a diehard worker, project oriented person. And when I'm not doing that, I am totally content just hanging out of my house. So as we are looking and moving towards these goals, it's like, these are arbitrary numbers. These are my arbitrary numbers. So I'm like, hey, 30 grand, like, I'm not going to think of $30,000 in fun stuff to go do, because I don't really get down like that. But like, that's good for covering your weekend trips down to Springfield, random road trip, some experience that I want to go do, traveling in and out of the country to go do stuff doing that. That will cover that for me at the frequency that I want to do it easily, and then some. So like, that's actually, like, if I tried to live up to the limit of $30,000, I would have to start thinking of things to do, which I'm probably not going to do, because I'm content being at home, going to the gym, and figuring out some sort of worthwhile, fulfilling work to do. But we're looking at that. They're saying that at the current rate that we're going, we're looking at 3 years is the time window when our income will match that for what we're looking at. And yeah, I'm content with where this is, the growth that we have. We're about to start shifting some growth. Some of the strategies that we're using over to this portfolio after we finalize the other portfolio, the primary income portfolio, because that's where my focus is, because that's what's generating most of the money. And yeah, so let's go take a look at the positions. Go to holdings. And now that we're down to just Ulti, we're flat. We're actually pretty flat in total profit. So it's holding. Our cost per share is 602, which we're dragging down every time we purchase. Current value of Ulti is $5.42. Dividends paid out, we are at $4.79 with a dividend yield of just at 80% total for everything. Total profit is 0.88, not doing too bad. Flat is good with high yield, considering the nature of what we're doing. It's very high risk. And also you're constantly combating NAV erosion, which we haven't seen with Ulti yet. Which is good. Like, I'm down with that. Like, it's recovering the NAV. The market, on the other hand, is not helping us. We're getting beat on by the market. But with this fund, and the reason it's a foundational fund for me, is they have the ability to pivot. It's also weekly. If it was monthly, when it was monthly, this fund did not perform well at all. You can go see the numbers. There was NAV erosion. There was almost a reverse split, and they had to reorganize the entire thing. This iteration of Ulti has been performing. And they have the ability to pivot as they need to not just erode and go down to heck because they're stuck in bad trades for 4 weeks versus a week. And they've been paying. So down a little bit off of the 10 cents a share, but the market's also down. We're still at 9 cents a share. I've factored mine for 8 cents a share, which is the worst I've seen it since they've reorganized it. And yeah, you just go from there. Hopefully, when we get some turnarounds this end of the year run, hopefully we get that, and we can see the reverse of this, which is some upward mobility, some upward performance, and the NAV moves up, cool. But as long as the pay, like, if we just ride out at a dime, like if we get back up to 10 cents, like, that's awesome for me, because that's overshooting my goals in both portfolios. That's what I've got for this one. We had a little downturn at the end of the month. Definitely seen worse. I mean, there's definitely worse positions to be in. Misty, which I was in, and you know, we got out and, you know, every time I look back at it, I'm like, ugh, they're stuck in those bad trades for 4 weeks. Like that's just a bad way to be. I am looking at some of the weekly MicroStrategy positions, and actually at these rates, MicroStrategy is back in a hardcore buy range for me, so we might be pivoting some funds over to that as well. That's all I've got for you guys for this week, this episode. I hope everybody is fortifying the bag, as it's Bag Fortification Friday. And, you know, there we go. It's Bag Fortification Friday. And, you know, let's make those decisions that help us in the future versus just helping us right now. And with that, we'll see you next week. Do not forget to like the video. Do not forget, if you haven't already, to subscribe to the video. And most importantly, the best free way to support after liking and then subscribing is to go ahead and hit that share button and share it with your circles as well. Get me out into the algorithm. Real stories, real people, real financial situation, because this is actually my money. Yeah, we'll be back. This has been another great episode of the Robinhood Portfolio Update for September, the week ending September 26th. We'll see you next week. It's your boy Reckless Ray and Arrow, and I'm out. Peace.
Money on my mind, yeah. Focus, got no time for games, nah. I don't play, man, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.